Hello there, my name is Ben Walker, and today, with the help of Promise Yourself, I'm going to be talking to you about some of the things that we're just not taught about at school. Now, over the course of this guide, I've covered things like mortgages, borrowing, saving money, budgeting, renting, moving out, all that kind of stuff. So today I'm talking about payday loans. Now, I'm sure many of you have heard the term payday loans before, and to a lot of people it sounds quite scary, and really they are. You need to be very careful if you are considering a payday loan, but simply put, they are a loan that's designed to help people make it to payday. If you need money fast and you don't have enough to last a month, that's what a payday loan is designed for. There's a few things that you should really bear in mind before you consider getting a payday loan. First of all, if you do get a payday loan, lenders see that as a massive red flag. So that means if at some point in the future you need to get a mortgage, or you just want to borrow some money from a high street lender of some sort, they'll see that you've taken out a payday loan before, and to them that's going to send alarm bells going off, because it may make it seem as though you're not quite financially secure. So really think about it before you consider getting a payday loan. Also, typically payday loans have slightly higher interest rates than other loans, as you might imagine, because if you look at it from the lender's perspective, they're quite a high risk form of lending. So really you want to be careful about what's going on. But fortunately, there's quite a few laws surrounding payday loans that are designed to protect the borrower. So I'm going to dive into basically the cost behind a payday loan a little bit more right now. Now, payday loans are regulated by the Financial Conduct Authority, which means there's plenty of laws in place to protect a borrower. Now, the first of these is the amount of the percent of interest that they can charge on any loan. Now, the maximum they can charge per day is 0.8%. Now, that doesn't sound like a lot, but it all adds up. For example, if you were to borrow £200 over a 30-day term, at the end of that 30 days, that 0.8% per day will equal £48. So already you've nearly paid, we're having to repay a quarter of what you borrowed on top of the original amount. So that's £248 to repay. And that's all at the end of the term. Now, there are additional fees if you can't pay it back. That's also known as defaulting on the loan. The maximum that a lender can charge you for not paying back on time is £15. That's just a flat fee, and it's £15 for not paying it back on time. Additionally, even after you haven't paid it back, they can still only charge 0.8% interest. Now, if we go back to our original example of £200 over 30 days, after 1 month, of course, you've nearly have to repay another quarter on top of what you borrowed. After 4 months, you're nearly repaying double. So you really do want to make sure that you are paying these back relatively quick. But fortunately, there's another rule in place, which means that the borrower can never repay more than double what they borrowed in the first place. So if you borrow £200, the maximum you can repay is £400. Now, if you're taking out a payday loan, that means that you really need the money. So for people who really need the money, there's still obviously quite a lot of money to be repaying, but it's a lot better than it could be. But simply put, you're going to get that after 4 months or so. You really want to be repaying this loan as soon as possible. Next, I'm going to talk about how you actually repay the loan. Now, there's a few different methods you could use to repay the loan, but normally what a lender will ask you to do is to set up a recurring payment. Now, this sounds very convenient, because simply what it does is at the end of the loan term, the lender will go to your bank and say, right, this is how much they owe us, give us the money. And then the bank will give them the money. Happy days, loan paid. But it can be very dangerous as well, because the lender can take out the full amount they're owed from your account, which then could mean that you're left with not enough money to pay for food or utilities or rent. So if you're not sure about setting up a recurring order, there are other options as well. One of these is a direct debit. Now, the good thing about a direct debit is it has to be set in advance how much the lender is going to take out. So they have to say, this is how much we're taking out. You say yes, happy days. And then if the lender does want to change how much that you're going to repay, then they have to notify you first. They can't just up the amount at any point. They have to have your permission to change that amount that they're going to take out of your account. So that's a bit of a safer, it's a bit more hassle, but it's a bit of a safer method to do it if you are concerned that you won't have enough money in your account. And then the final method that's quite common is a standing order. Again, it's very similar to a direct debit, as in it's all discussed beforehand. You know exactly how much you're going to be paying and at what points, but a standing order can't be changed. So the lender can't come to you and say, right, we want to take a little bit more this month. They can't do that. Okay, a standing order just means you're paying this amount at this time for as many times as you have agreed, whether that be a one-off payment or you can spread it over 2 months. If you are taking out a payday loan, it's very important that you understand exactly how you're repaying your loan, when you're repaying your loan, and what extra interest charges you may incur if you do pay it over a set amount of time. So really be honest with your lender. Say, right, this is what I need. Can you do this for me? Because if you lie to your lender and then get into a bad situation, I'm not sure how much sympathy they will have. So really be honest with your lender. Make sure you understand what you're getting into. Now, one thing to bear in mind is that there are traps when it comes towards payday loans. If you're getting towards the end of the loan and you just can't pay, your lender may come to you with a very enticing offer. This could be in the form of an extension or a rollover, where essentially all they're going to do is say, we'll give you a little bit more time. But if they do that, the chances are you're going to end up with a lot more interest repayments to make. So it could end up costing you a lot more money in the long run. So if you are in a situation where you can't quite repay, really consider what your best option is. But the good news is, if you are thinking about getting a payday loan and you can't pay it back and they keep offering you rollover after rollover, each time they offer you a rollover, they have to give you the details of a free debt advice provider. So no matter what happens, you should be able to have pretty easy access to some sort of debt advice. Now, payday loan lenders tend to advertise their products as the ultimate fix-all to all your problems that you could ever possibly have. Now, that's just not true. There are quite a few circumstances where a payday loan may just completely destroy your finances. For example, if you already have a payday loan and you're trying to get another one, that's just a big no-no. If you're trying to use it to pay for loans you already have, or if you're trying to buy new clothes or something, if it's something that's not absolutely essential, you shouldn't be even thinking about a payday loan. So at the end of the day, a payday loan really is something you need to seriously think about because of the implications it may have on your future credit report or credit score. So just make sure that you know for a fact that you need a payday loan. If you have any doubts whatsoever about whether you may not be able to pay it back, then really don't do it. It's not worth the risk. So make sure you are seriously considering every aspect of a payday loan before you consider getting one. Now, the good news is, if you do get a payday loan, you can still withdraw from that contract within the first 14 days. So you have a grace period of 14 days where you think, maybe this was a bad decision. Now, of course, if you use any of that loan, then you're going to have to pay that back in that 14 days. For example, if you get a payday loan of £300 and you spend £50 on a tank of petrol, for example, you still have to pay that £50 back plus any interest it may have gathered. So while yes, you still have to pay interest on what you spent, it could end up being a lot cheaper in the long run. So there you go. I wouldn't say it's a get out of jail free card. It's an opportunity for you to rethink whether you really need this loan. Now, to sum up what I've been through in this video, essentially, payday loans, they can be a useful product. They have their place in the market, and for some people, they may be ideal for what they're looking for, but for the most part, payday loans just aren't the answer. If you're seriously considering getting a payday loan, make sure that the lender is regulated by the Financial Conduct Authority. That's very important. And make sure you know how you're going to pay it back. If you're going to be waiting for your next paycheck to pay it back, or if you're just not sure about how you may pay it back or not, it's really not worth it, okay? I hope you guys take on this message because it's a massive, massive risk to be undertaking. Hopefully you've learned something from this video. My name's been Ben Walker. Please do like and subscribe to our YouTube channel, follow our TikTok, Instagram, all of that, and have a look at our website as well to learn more. I'll see you guys again next time.